Solana's winning on every metric you want to look at: transaction throughput, user growth, new wallets, trading activity on the chain. To me, it looks like the token is undervalued relative to some of the other smart contract chains because it's where the user base is. If there's a new narrative in crypto, it's essentially happening on Solana first before it goes to some of the other chains. So I just think there's a lot of potential with Solana. I'm long-term bullish.
Joseph Onorati is CEO of DeFi Dev Corp, a publicly listed digital asset treasury company focused purely on Solana, aiming to outperform native staking with an active on-chain strategy.
We projected over 200% SOL per share growth in the 1 year period. We've already achieved 50% SOL per share growth in a 1 month period. We were targeting end of 2028 to achieve 1 SOL per share.
To start off, I would love to know how you even got into this space, and then we could kind of go into the business.
Into crypto or into treasury companies?
I mean, hey, I guess they're kind of separate categories, but more crypto. And then we could go the treasury side.
A bit of a story, I think. So when I was a teenager, I used to play like these massively multiplayer games. Ultima Online was kind of my preferred game. It's a precursor to World of Warcraft. And I remember I have this like 16-year-old pretty vivid recollection of trying to trade stuff in this game, in the digital economy of the game. And the prices were going up every day. They'd go up. And I'd be selling my stuff. Prices are going up, 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 up. And it turned out that someone had figured out how to duplicate the currency in the game. So they were like exploiting and creating a bunch of currency. And also probably just inflation was running away in some of these early games because the developers didn't have proper kind of systems in place to sort this stuff out back then. And I remember one day, maybe about half the traders had kind of switched what asset they were quoting. So they were reusing the currency that was supposed to be used in the game, like gold or whatever, and they just switched one day to using another asset that was much harder to duplicate. And I was like, oh, that's weird. I don't know what's up with that, but okay. And I just kept quoting in the regular currency in the game. But then the next day, it's just over a 2-day period, basically every trader had switched to this other currency, or another asset became a currency in a crazy short period of time. And, in my 16-year-old brain, I was like, okay, cool, I'll just quote in the same thing everybody else is quoting. And I kept thinking about this, and it just kind of pulled at me, for years. And I went into university and kind of walked into an economics class by accident. And coincidentally, my professor was into monetary theory, and he happened to be kind of a subscriber to the Austrian school. And basically, I understood what happened kind of through economics, and I studied economics as a result. And later on in graduate school, I did some work on digital economies, like writing about these games. And then after my graduate program, somebody sent me, I think it was the first Wired article on Bitcoin in 2011. I was like, oh, this is like that stuff that I used to write about. That's interesting. But I just had kind of an academic interest and didn't try to participate. I wasn't into technology at the time. I was working in policy. And then in 2013, I started going to meetups, and I was talking about Bitcoin and monetary theory because I was just interested in it. And somebody told me, you can actually do work in this space. Like, you can work here. I was like, what, really? So then I went to work at CA Vertex, first Bitcoin exchange in Canada. They made me the CEO, and I sold it. And then went to work at Kraken a bit later, and I was there for about 8.5 years.
So a number of you are from Kraken as well, right? And other pretty big industries across the space. How did you all kind of decide to jump ship together? Yeah.
Oh, no, I wouldn't say jump ship together. So I left about a year ago and worked on some other stuff. I was trying to run a market making business for a bit. And I worked on a decentralized options trading. Well, it's not actually options trading, mint redeem options. I think it's how options should be done on chain, but not the topic for today. And then got into the treasury strategy business. But there have been many, I mean, literally thousands of people now who have come through Kraken, right? Like they worked there for a stint. I mean, the business has been around since it was founded in 2011, and it was kind of scaled up and scaled down through cycles. And there's many Kraken alumni. So yeah, some of the folks we have picked up kind of came straight out of there, but many of them are just folks on our network who we worked together with before.
Yeah.
But yeah, almost the entire team is ex-Kraken, and I was the chief strategy officer there most recently for the last, I would say, 2.5 years.
Very cool. Yeah, I mentioned in the intro that DeFi Dev Corp used to be known as Janover, which was a real estate financing company, right? But in April, it rebranded to align with its Solana Treasury strategy. What was kind of the decision behind this?
Well, we're kind of seeing this. We were like one of the first companies, I guess, first company to do a transaction like this for a non-Bitcoin treasury, and then of course since then there's been probably dozens now of these treasury companies coming to market via a change of control of a already listed company, and so that's what we did here. So we just bought over half of the stock of the company from one individual shareholder, which is a bit of a unique way to do one of these transactions. Most of the other ones now are just a big pipe of private investment in public equity that you take like a $10 million company and you invest $100 million into it at a $110 million valuation, say.
Mm-hmm.
This is just an example of other deals. And that's kind of the new approach or current approach to many of these treasury strategy transactions. But ours was a bit different, and I'd say unique, and a little rarer, just because of the capital structure of the of Janover and relative to capital structures of some of these other companies that we're seeing transactions.
I was going to ask, what was kind of the decision in honing in on Solana opposed to something like Bitcoin or Ethereum, like a lot of other digital asset treasuries or DATs, as we like to call them, have done?
Yeah, so Parker White, who was supposed to be on here, but had some issues. He and I, we worked at Kraken together, but we've both been interested in, or not interested, participating in the Solana ecosystem since mid-21. He's been running validators for about 2 years, and we're both kind of, I'd say, DeFi degenerates. And so when we started talking about, hey, we can probably do something in the public markets now, choke point 2 is over, what could it be? It was pretty obvious that it needed to be Solana, right? Like we could have picked any asset at the time, right? Nobody else was doing this yet. We were the first non-Bitcoin treasury, and of course we're both big Bitcoin fans and think Bitcoin's money, but we picked Solana for a bunch of reasons. One is just personal. We're personally interested in participating in the ecosystem, and I think that's probably the biggest driver. Two is we post about this stuff on the company's Twitter account all the time. Solana's winning on, I don't know, every metric you want to look at. Transaction throughput, user growth, new wallets, trading activity on the chain. I mean, to me, it looks like the token is undervalued relative to some of the other smart contract chains because it's where the user base is, and if there's a new narrative in crypto, it's essentially happening on Solana first before it goes to some of the other chains. So I just think there's a lot of potential with Solana. I'm long-term bullish. And then why it specifically fits for a digital asset treasury business, I think there's 3 reasons, certainly relative to Bitcoin. One is there's native yield on the asset, so you can stake it and earn yield. And we run our own validators at DFDV and stake the balance sheet to our own validators. And then 2 is it's more volatile than Bitcoin, and volatility is a core component of these treasury vehicles because the volatility supports or essentially sets the price for the convertible debt financing that we've done twice now, one in kind of a private financing led by Pantera before, concurrent with our change of control, and recently a larger one with Cantor Fitzgerald leading. Um, so the volatility is kind of a critical component. Of course, that also leads to more volume and liquidity in the stock, which is another facilitator of fundraising via basically any fundraising, but specifically the ATM, the at-the-market new share issuance, or in our case, an ELOC, an equity line of credit that's set up to look like an ATM. And then third is you can actually participate as one of these companies, a public company, in the Solana ecosystem. So we have, Sanctum created the dfdvSOL, our liquid staking token, and we've kind of supported it. But that token is integrated across much of Solana DeFi, Camino, Drift, the interest rate markets like RateX and Exponent. And so the company can actually participate in the ecosystem. So we mint dfdvSOL, we lend it out on Camino or Drift, and we're able to borrow SOL at a rate lower than our yield from staking it, and then we can at least very carefully or with controlled leverage loop that up to drive our SOL per share growth.
You brought up Pantera and Cantor Fitzgerald before, and obviously Pantera is a crypto native firm, and then Cantor Fitzgerald is not crypto native, but they're definitely crypto adjacent, I would say. They're dipping their toes into this space, getting more active. With the conversations that you're having with them and integrations, like what do they really see as like the value add for DeFi Dev Corp, especially in regards to like the whole DAT structure that's going on out there today?
Yeah. So I'd say the value drivers for Cantor and for Pantera are a little different. So
Right.
Pantera's kind of principle, they're investing with money in the fund. Cantor's not investing with their own money, or they're facilitating investment with third-party investors. I guess to some extent that's true with Pantera, but Pantera kind of takes a long-term view and is kind of putting their money where their mouth is. And I don't know, maybe I shouldn't speak for Cosmo or Marco there, but I'd say it's kind of the story that we want to tell all investors is the primary goal of the company is to drive SOL per share growth. So DFDV is intended to be the best way to accumulate SOL. And we see a similar story with MicroStrategy, where instead of Bitcoin per share growth, they've kind of inverted it to Bitcoin yield. I think last year they yielded over 70% on their Bitcoin on a Bitcoin per share basis. And since they adopted the Bitcoin Treasury strategy, they've outperformed Bitcoin by about 3x. And this is because they're able to participate in financial engineering, essentially benefit from public markets access to capital to grow Bitcoin per share. And of course, we're doing the same thing. And in our press releases, we put out 3 in the last 3 weeks where we announce the SOL purchase and then the growth in SOL per share. And I think over the last month, our SOL per share growth is over 50%. So I don't know. I think that's the answer on why an
No,
investor
for
would
sure.
be interested here. Um,
Yeah.
yeah,
I
and
s-
Cantor's sorry, just
no, go ahead.
I can shut up.
No, please. You're the guest. We want you to talk.
Yeah, then Cantor and the investment banks, I think they love this stuff because it's like a fundraising bonanza for the banks essentially, and then they take a fee on whatever the fundraise is. Say 2% to 7% of the fundraise goes to the banks. So, many of the kind of certainly not crypto native investment banks are getting into this and are very excited to fundraise for these vehicles.
So you think the institutional adoption of these digital asset treasuries, specifically for DeFi Dev Corp, is going to continue to grow?
The institutional adoption, well, yes, but that's not actually our core focus. So,
Hmm.
uh, uh, I don't know. I guess I kind of go on a bit of a rant about this. I think retail front ran institutions in crypto for many years, and it took them, a
Yeah.
decade to kind of figure it out. And I don't think that we're at this like, oh, we're at the institutional tipping point. Everybody's coming in now. I hear this narrative a lot. I hope it's true, but I have my doubts. And I think for the treasury companies outside of MicroStrategy, um, kind of the primary demand for the stock is still retail interest. And now it depends on what the investment offering is. If it's like a straight equity deal, well, let me put it this way. At the end of the day, the buyer of the stock is like a retail investor. Now, there's kind of intermediaries along the way. Like if we see these new, private investment in public equity, the pipe deals into the new treasury companies, yeah, those are all funds participating, but they're looking to exit that position. Who's buying when they're exiting the position? It's retail. It's not like sovereign wealth funds are buying this stuff up yet. It's primarily, but outside of MicroStrategy, it's primarily retail traders kind of at the end of the day, though maybe the capital gets recycled on the way to those investors.
That's actually surprising to me because, I assumed retail would be buying this, but I also thought retail would just go straight to buying the actual asset itself, like go buy Bitcoin, go buy Solana, go buy Ethereum, whatever. But they're actually coming in because of the multiple returns that you brought up before, you think? Or what's driving retail to
Yeah,
these DATs?
that's my theory. I mean, the debts, well, I guess MicroStrategy is really the only one with enough kind of history to say this, but
Hmm.
they've just outperformed the underlying asset. So I
That's
think it
kind of
makes a lot of,
crazy. Yeah.
yeah, I mean, if I didn't really understand what MicroStrategy was doing, honestly,
Hmm.
until, I don't know, 4 or 5 months ago, right, when I started really digging into this. And I said, geez, if I understood what they were doing back in 21, I would have sold all my Bitcoin and bought MicroStrategy. And I think that's a considerable amount of the uh, kind of long-term holders flowing into these treasury companies.
Hmm. I mean, these treasury companies have taken off massively this year and is like one of the most talked about trends. And I continue to see them popping up, not on a weekly basis, but it feels that way.
There's
And
going to be
a
a lot
question,
more.
yeah, for sure. But that's kind of like what I'm getting at here is like, how do you kind of think about the competition and standing out in this crowd? And then I have like a million other questions on this front because there are a lot of them. Like, do we need this many?
I don't know. I don't know if we need this many. We have our answers on how we stand out. We're
Hmm.
still, I think, the most crypto native treasury company here. I don't think anybody else has an LST. I don't think anybody else has their LST integrated across all
Like a
these.
liquid staking token. Yeah.
Yeah,
Hmm.
sorry, integrated
You're
across
good.
all these projects. Um, and uh, I don't know. I'd say we're very active in the community. We're sponsoring Mountain DAO. We're going to go participate in Mountain DAO, which is like a month-long hackathon for Solana. That's just kind of one example. I'm not sure what else off the top of my head we've made public, but we're in the Solana community kind of day in and day out, and participating on the chain with the balance sheet. And I don't see this with the other companies. So, uh, I don't know if this is like a long-term mode. I think this is going to be as more teams come in with this expertise, there'll be more businesses that participate on chain, right? I'm waiting for a big, kind of meaningful Ethereum participation team, and saw one hyperliquid vehicle that's farming airdrops and so on the hyperliquid chain. And I think that makes a lot of sense. And anyway, so that's one. And then another announcement we made, I think it was a few weeks ago now, is what we're calling DFDV Treasury Accelerator, where uh, we want to facilitate foreign companies in particular trying to launch Solana treasuries. So, maybe like, oh, Metaplanet's been very successful in Japan. Maybe there should be a Solana treasury strategy company in Japan. Maybe DFDV can help facilitate that. Maybe we can, uh, I don't know, share some expertise on validator operations or how to pass an audit for crypto assets or whatever. So we put that kind of out there in a press release, and we've gotten, I'd say, pretty meaningful inbound interest on that. We don't have a new vehicle in market, but we spent a lot of time there.
Mhm. So it's not just buying the token, it's actually about investing in the Solana ecosystem, which, like, personally, I would argue by investing in the ecosystem, that kind of accelerates the opportunity and or market share of a token. That's how it should be, at least, like, in public markets. That's how I think about it. And so it's interesting that you guys are doing more than just buying the token, because you're actually investing in the ecosystem. And I say it's interesting because, like, a lot of these DATs out there actually don't do that. They don't actually engage and or like accelerate. They just buy, right?
Yeah, I agree. Yeah, I think we keep saying this. I think these companies, like many of the other crypto companies, are sort of like the winners are determined in the bear market, and we're not in
Mm,
the bear market. So
no.
it's hard to say kind of who's going to come out the other end of it. But some of my best times working in the space have been in the bear market because the people you're working with there are people who actually wanted to be there, right? They're not there
Right.
for the money, or they're not there because, it's like the hot thing in Silicon Valley. Um, they're in it for the mission or the cause, um, which has been a lot of fun. Anyway, I think this is how it's going to go for the treasury companies too. There'll be companies that trade below 1x NAV, maybe far below 1x NAV. There'll be consolidations, and we think this is a multi-cycle business for us. And even when we were pitching this in the first place, we were saying we got to get going now because we have to set ourselves up to survive a bear market. And kind of how we win is on the other side of that.
Yeah. I was going to ask on the front of, when the music kind of stops, and you brought up the bear market and consolidation. And that was one of the questions I had written down is like, obviously there's a ton of them out there. And part of the question is like, do you think there are too many? But then also, what will the shakeout look like when the music does stop?
Yeah, I actually don't think there's too many yet. Likely
We
some of
need
the
more.
ones. Yeah,
Hey.
look, so I think the like total addressable market for this is actually very large, much larger than what we've seen already. I think the digital asset treasuries are I'll go with strictly better than ETFs. Um, they have more flexibility on what they're able to do with their balance sheet assets. Um, they can run the validators inside their own business. They don't have restrictions on, or nearly as many restrictions on what type of asset they can actually hold. And it's actually easier to come to market with these vehicles than it is for an ETF. Like we're going to see probably like, I don't know, tokens in the top 50 to top 100 kind of range on like a CoinGecko or CoinMarketCap come to market via these treasury vehicles, and they might be years away from a US listed ETF. So I think there's going to be a lot more of these. I'm not sure, we're done either. And if we look at the size of the ETFs and we say, well, if the treasury vehicles are actually better than the ETFs, then maybe these things should be in some, even larger than the ETFs in kind of the long run. So yeah, I don't know. I'm pretty bullish still, right? Like you said, what happens when the music stops? I'd say the music hasn't stopped yet.
We'll do an updated episode when the music does stop, maybe.
That'll be
And by
very
that,
interesting.
yeah, I mean, I think about it more of like the price action for the crypto market as a whole is like what I think of as the music stopping. And then
Mhm.
like how do you think about hedging for that moment?
Okay, I think this is pretty interesting question. So I don't I think investors want just a little bit of active management in these vehicles. So like for example, they want MicroStrategy to put out guidance on when it will run its ATM, at what NAV multiple, and I think they actually just did put out some metrics on that. So to one extent, there is kind of active management there, but I don't think. Well, I'd say very few investors are going to want these assets to actually try to call the top, or these vehicles to call the top and sell their treasury assets. I think that's crazy. Like, we're not going to do that. And so, uh, the, and of course, we've been in the space, for a long time, been through many cycles, for better
Hmm.
or worse. And I think so these companies must expose themselves to the volatility, the leveraged volatility actually on the underlying asset, which could draw down 80% or something, right? In a bear market. And so I think these companies, including DFDV, have to prepare for that. And for us, I mean, it's just about planning. Like I've worked at exchanges through 4 of these cycles now, I think. Yeah, 4. And in each case, if we planned well, said, well, times are really good in the bull market, we should probably have like a strategic objective about how we survive a bear market. Don't overhire, set aside assets on the balance sheet to prepare. There's going to be really cheap acquisitions at the bottom that are possible, um, or even just buying the asset at the bottom. I mean, we want to give investors as much exposure to the underlying asset as we can, but we have to make sure that we don't put the company at risk in a multi-year bear market at the same time. Sorry, maybe
Hmm.
that's a little vague,
No, it
but
makes
we spend a
sense.
lot of time on this
No,
internally.
yeah, of course. I mean, I think about in terms of kind of like the buying mechanisms for this. I would imagine that plays a big part in this. I know DeFi Dev Corp has bought Sol on 18 different occasions. I counted it on your website.
Thank you. Jeez.
Yeah, you're welcome. Since the beginning of April, but I did not count how much it was. So I was going to ask you, like, what is the total holdings? I think it was above 1 million Sol, um, which would probably come out to what, like 16? No, I'm not doing good simple math. How much Sol do you guys own? I'll let
Yeah,
you answer the question.
almost 1.3 million according
Hmm.
to
Yes.
our latest
Okay.
update on it. Yep.
Okay. And then does the buying price matter to your team? I would imagine yes. Like, how do you kind of think about that? Or is it more just like, hey, we'll buy it whenever and the dollar cost average will make it good, I guess. I don't know. You have probably a better answer than I do.
When we can fundraise is probably kind of top of the bull market, right? That's the best time to fundraise. And MicroStrategy, Michael Saylor says he buys the top because
And he
uh,
has, yeah.
yeah, but he has to buy the top because it's when they can fundraise. So market heats up, MNAV expands, fundraising gets easier. Um, I mean, that's when you have to buy. That's I think the expectation from the investors to sit on cash is not the point of the business. Of course, we try to get the best fills that we can, and I actually think the team has done a really good job on that. Um, and we've got some good access to the Alameda kind of bankruptcy discounted locked sol, which has brought our average cost down quite a bit. And we're very particular about how much fees we're paying on a trade as well. So we're conscious certainly, but if we're able to fundraise, we have to buy.
That's interesting. You were able to buy the bankruptcy Alameda Solana. How did that happen?
Yeah, just some of it. Honestly, it's not that hard. All of it's custodied at BitGo. So BitGo basically just has a spreadsheet of all the sellers, and you just talk to their desk. They're very happy to
They like take it.
facilitate. Yeah.
Yeah.
Galaxy also has a fund structure where they bought a whole bunch of it, I think billions of dollars of it, and they've put it into a fund structure where investors can buy and sell the fund. So if you're a Galaxy client, you can get access to the discounted locked sol via their desk as well. But it's
Mm.
structured differently, and there's some fees on it.
Would you ever consider buying other assets aside from Solana, or it's always going to be strictly Solana?
It's Solana in this vehicle with potential for Solana ecosystem assets. I wouldn't mind some exposure to some of them, relatively small. Um, and then we have contemplated supporting other vehicles in other assets, but preferably they have, some tie to the Solana ecosystem.
Okay, so no buying Bitcoin or Ethereum or other like top assets out there.
No, no, no. We're long-term bullish on Solana, and we think very close to or exactly single asset vehicles are what investors actually want.
Yeah, no, that makes sense. When it comes to kind of opportunities on Solana, there's a lot of sectors that have taken off in recent months to years. What do you kind of see as like the biggest opportunity within the ecosystem today?
I'm like, this is my same answer for many years. So maybe I'm wrong, or maybe I'm just bullish. I think it's DeFi. So I think money is the best application of blockchain technology, and finance is kind of the second best application of blockchain technology. So I'm always bullish on DeFi, basically through any cycle since, I don't know, the beginning of a smart contract being able to be used for trading or lending or any other piece of finance.
hmm Yeah, I mean, I guess that checks out the name DeFi Dev Corp then.
Yeah,
And also like DeFi is one of the most obvious use cases and like best product market fits. Obviously, there's other ones out there that are good, but like since its early days, DeFi has been the core of like what every blockchain is built on, right? So that would check out.
yeah,
Um,
yeah. Nearly every blockchain now. Well, there are a few of the decentralized AI ones, or um, I don't know. I guess that's the other kind of big recent narrative.
you also brought up acquisitions. Would you acquire like DeFi protocols within the Solana space, or what's kind of on like the M&A front for you guys?
I think the only acquisitions that we would be interested in the shorter term would be uh, other treasury vehicles that trade at a below NAV.
Mm.
Um, if there wasn't, too much kind of hair in the deal and we thought it was accretive on a SOL per share basis to do a transaction there. The other that we could be interested in is validators with kind of sticky delegation, but um, the revenue multiples that we've seen on those deals to date are too high in our opinion. But we could, I don't know, maybe we would see like a 1.5 or 2x kind of revenue multiple in a bear market on some of the uh, smaller validators, and I think that could get interesting. Um, but we're not super acquisition focused. It's just like a thing that we talk about on what would happen in the bear market and what we might want to be prepared for.
You also brought up earlier on and just now validators, and a lot of our listeners probably are familiar with what a validator does, but why is your company kind of going down this route of having its own validators? What is the purpose it serve in this context?
Yeah. So if I'll try to do simple on this. So if we have let's say $100 million worth of assets on the balance sheet, and we stake them to a third party validator, maybe we net yield 7%. And the validator that we're staking to earns block rewards on the SOL to which we are delegating to them. If we delegate to our own validator, we get to keep those block rewards. So it improves our economics. So maybe instead of earning 7% on SOL delegated to a third-party validator, if we stake it to our own validator, we might earn, say, 9.5%. Our validators are pretty high performing. And then it also allows us to get third-party delegation. So another individual or entity could stake to the DFDV validator. And that's just out there. You can go find it on these various validator search sites and delegate yourself to the validator. It also facilitates the dfdvSOL, the liquid stake token, which right now is a single validator LST. So it facilitates the minting of dfdvSOL, which then allows the liquid stake token to be used as a collateral asset across various Solana DeFi ecosystem projects. Yeah, I think those are the kind of primary reasons for running our own validator. Yeah, it just improves our economics and supports SOL per share growth.
I think the current SOL per share is 1022, which is kind of, for people who don't understand what that means, it's like the dollar value of SOL correlated to the share of the company, right? How does that kind of fluctuate in terms of context, or in regards to the context that you just brought up? And is there ever an opportunity for it to kind of be on par with both the share of the company and Solana itself? No, right? No to Solana.
If I understand the question, no to Solana. Yeah. So
Yeah.
all of these
Like
metrics,
$165 or whatever Solana's at.
Oh yeah, we could get there. Yeah, so we
Okay.
actually put out forward guidance, and the forward guidance was from when we put it out there. I think this is available on the website. We projected over 200% SOL per share growth in the 1 year period. And like I mentioned before, we've already achieved 50% SOL per share growth in a 1 month period. And we projected forward to the end of 2028 is our previously forecasted. I'm not like reinforcing this target. It's, when we announced it before, we were targeting end of 2028 to achieve 1 SOL per share. And all of the stuff's actually available on the website. It's dfdv.com. I think we have the best website in the industry. Actually, I'm very bullish on the website. It's just metrics. It's got all the metrics on SOL per share, the share count, prices of the stock, market cap, historic returns. It's got all of our debt data on there, all of our purchase history on there. I'm really happy with the website.
I think we've covered a lot of ground, Joseph, and I would love to know, what do you think is really the next steps here? I feel like we're in the early days for these DATs, but what are the other opportunities that you're eyeing? We talked about market downturns, but also in the current conditions and long term. Like, what's the biggest opportunity that you would like to tap into?
Yeah, kind of our biggest time focus right now is on the DFDV Treasury Accelerator. So again, that's focused on facilitating the launch of treasury strategy companies for Solana in other geographies, and we're pretty excited about that one. And of course, we're always looking for kind of fundraising opportunities, and are always kind of pursuing various paths there in a way that's accretive to SOL per share growth, which is our North Star metric.
Well, last thing, Joseph, I always like to ask guests, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Yeah, maybe a big regret one. Let the winners run, I would say, is my advice item.
Okay, amazing. Thank you so much for coming on today.
Yep, thanks for having me. Appreciate it.